Welcome to the Transparent FX Academy. I'm Nick and I'm a top order trading view with over 190k reputation points. In this video, I'll speak about USDJPY. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is approaching and testing a very strong historical monthly support and demand area. In fact, from here, all these previous rejections to the upside were created. At the moment, the market is testing the same zone, and there is definitely the possibility of seeing some institutional shift happening inside of this area. And we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, we must realize from a technical perspective how we are at a previous level of demand and support. We can also notice, however, that from a trend perspective, the market has already failed continuing higher. In fact, we were clearly in a strong uptrend. In an uptrend, you expect the creation of new monthly higher highs and higher lows. Now, the market failed in creating a new higher high and essentially created this lower high. So in the long term, there is reason to believe that this uptrend is actually coming to an end. And even though we could see some short-term bullish price action away from this demand and support zone, in the long term, there is definitely the possibility from a structure perspective to see an inversion from a bullish trend to a bearish trend. Now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, we see both these things, but simply with more granularity, because what we can notice is that, first of all, the demand and support is very clear. Every time the market tests this zone, it found strong institutional buying inside of this area. At the moment, we're seeing the same thing. We had the test immediately rejected to the upside. There is a possibility to see another test and then another rejection to the upside, as happened here. Here we had the first test, retest, and then the market rejected to the upside. There is definitely the possibility to see the same thing happen again. However, what we can notice at the same time is that inversion of trend, because we can notice how we clearly have a bearish trend from a weekly standpoint. The market went from creating these higher highs and higher lows to now creating lower lows and lower highs. So we have a clear established downtrend from a weekly standpoint. So both of these things need to be taken into account. So let's keep all of this in mind and drop down on the daily time frame. From a daily perspective, the situation is quite clear. We had a very strong structured zone, which was this one here, which was the level from which all this choppy price action originated. And I made a full breakdown just a few days ago when the market was going and testing this area, and I explained all the reasons for which I was expecting a test of the zone and a rejection to the downside, which is now exactly what the market did. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. But at the moment, what kind of situation we have? Well, again, before going into more details from a technical perspective, we first have to check what is going on when it comes to the commitment of traders. So how are the non-commercials and the big institutions in the market positioning themselves? Well, if we look at the data for the JPY, the first thing that we have to keep in mind is that if we are looking at the data for the JPY, we're actually already looking at JPY USD, because all currencies on the spot are traded against the USD. So since we want information on USDJPY, we simply have to reverse everything. So if institutions are adding thousands of longs and closing thousands of shorts on the JPY, they are essentially shorting USDJPY aggressively, because they're adding thousands of shorts on USDJPY and closing thousands of longs. And we see this already with 4 reports. We can see tens of thousands of shorts closed and tens of thousands of longs added on the JPY, so shorts on USDJPY. So let's keep this institutional positioning in mind and move back to the chart. Well, in a situation like this, what this could easily mean is that a breakout below the support could trigger more bearish continuation and more institutional shorting. So until the market will remain above this area, the market could easily reject to the upside. However, a break below the previous low, that is where things get interesting, because if the market does break on the retest of the previous support and resistance, at that point, institutions are already adding shorts. So they could be adding even more shorts, further increasing the probabilities of a potential rejection to the downside. So if we do get this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, I wouldn't be surprised to see a potential rejection to the downside below this area for the market to complete this daily impulse correction and impulse pattern to the downside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.